Welcome to the very first episode of the Energy Signal podcast. I'm your host, Josh Lefebvre, coming to you from Houston, Texas. I've decided to start this podcast to give you a weekly 15-minute breakdown of what's really happening in the world of energy. Every Monday, we're going to cut through all the noise and we're going to go through everything from energy stocks to mergers and acquisitions to policy and innovation in the oil and gas space, especially renewables. Our mission is simple: to keep you informed, sharp, and just a few moves ahead. And whether you're on the field, on the desk, or just trying to make sense of the energy markets in general, this is the podcast for you. Stay tuned. So we usually like to start the Energy Signal podcast by going over some of the large cap stocks in the energy sector, some of the big movers, some of the big players in the field. We do like to focus more on the US market, even though, yes, the energy sector is international. And that's not to say that we won't go and analyze other stocks in other markets, other countries, but mostly for the sake of this podcast and the short time that we do have, we'll focus on US based stocks. So with that being said, our first big story is that crude oil actually fell by $2 on Friday, August 1st. They closed off the week at $67.26. And there seems to be a lot of jitters around an increase in production. So OPEC did announce that they would be increasing production. For those of you who don't know, OPEC stands for the Organization of Petroleum Exporting Countries. And whenever they announce an increase in production, but the supply isn't there, oil can fall very drastically. And I believe what happens is that, there was a weaker than expected jobs report that was released by the Fed in July. So that certainly got people worried. Next up is U.S. natural gas. U.S. natural gas pretty much stayed steady all week, closing off at $3.20. And it seems that there's going to be some warmer weather at the end of August in the U.S. So I guess, that one kind of just stayed as is. Moving on now to some of the key U.S. players. Exxon Mobil, their stock was down 1.9% to about $109.64. And this is surprising because Exxon Mobil actually beat their Q2 earnings. They beat expectations, and they actually had record upstream productions. Chevron, very much the same. Stock down 2.2%, finishing off the week at $151.40, despite also setting Q2 records for production, especially in the Permian Basin. What's going on? ConocoPhillips, they also underperformed, closing down the week at 2.3% down. So they finished off at $92.76. And this seems to have something to do with Wall Street is expecting a year-over-year decline in earnings on higher revenues as they are about to announce their Q2 earnings. So my takeaways from this is that despite record-breaking Q2 earnings and production from Exxon and Chevron and strong fundamentals across the board, these energies, they stumbled last week, right? Why? And it seems that there's a lot of fear going on right now with the job market. It's not about production. Production is better than ever. The Permian Basin is going crazy right now. But they're worried about price stability, demand durability. How well can these companies navigate the volatility? So strong Q2 earnings just are not enough to offset these massive numbers. So the next section in our podcast is some of the biggest news stories in the world of oil and gas and energy for the previous week. So without a doubt, the biggest story from last week, and still a developing story, if you recall, around mid-July, Trump announced that unless Russia agreed to cease hostilities within Ukraine, he was giving a 50-day window where the U.S. would impose secondary tariffs on any country that was still importing Russian oil and gas. In fact, he considered going up to 100% tariffs on such countries. Well, on July 30th, Trump announced a 25% tariff on goods imported from India, effective August 1st, explicitly stating that India was still importing Russian oil and basically forcing his hand. And according to India, they have no plans to stop importing that oil and gas anytime soon, and stating, in fact, that they have some long-term contracts in place that couldn't be broken at this time. So very interesting. I'm sure more to come from that story. In other news, Chevron officially finalized its Hess takeover, Hess Oil. This was a $53 billion deal, unlocking a massive stake in the country of Guyana, Starbrook oil field. This was a huge win for Chevron because this oil field is a hot commodity right now. In fact, they argued this in court with Exxon for years. And with them now winning this case and officially acquiring Hess Oil, the competition for offshore oil and gas is really heating up between Chevron and Exxon. So Chevron now gains a 30% stake behind Exxon's 45% stake in the Starbrook oil field off the shores of Guyana. And for the last portion of this show, we like to talk about renewables. So basically anything that involves solar, wind, or anything around like technological innovation around energy. So any big stories in that regard. And without a doubt, the biggest developing story in the world of renewables right now is that, if you recall, back in early July, Trump signed the Big Beautiful Bill Act that will dramatically phase out any federal tax credits for wind and solar if construction does not begin before 2026. So with this, many projects that were slated to start in the next couple of years are going to be ineligible, and it's going to create massive financial challenges for these companies. The bill is also imposing a bunch of new taxes on renewable energy projects that are using any type of foreign materials. Basically, he wants to reallocate some of these subsidies to coal production and steel making. No surprise there, but according to Reuters, analysts warn that this could cut U.S. solar deployment by up to 17% and wind by 20% over the next decade. And this could jeopardize, what they're stating is $263 billion in projects and risking 300 gigawatts in capacity, millions of jobs across the board. So very, very interesting from Trump, right? Obviously not a fan of these renewables as opposed to the previous office that really was incentivizing these types of projects. Also makes sense why this whole falling out between Trump and Elon. And yeah, it's looking grim for those that are getting into renewables. It seems that Trump really wants to push for these traditional energy sources, oil and gas, coal, and of course, just steel making in general. So I guess we'll have to wait and see how this shapes out. So to wrap this podcast up, I like to finish it off with some of my thoughts. And the bottom line and what I'm seeing is that despite strong Q2 earnings from some of the big oil and gas companies, it didn't seem to matter. Fundamentals were out the door. It seems that we're now trading on fear. I mean, between Trump's aggressive tariff strategy and the gutting of renewable incentives, we're essentially seeing a reshaping of global energy flows and capital allocation. And one thing that I'm seeing that is abundantly clear is that fossil fuel dominance is back with this new administration. And Wall Street, they still seem to be trying to figure it out. Like, what are the risks? What are the returns? How resilient is it? The energy sector is basically entering into a brand new phase. A lot of volatility, a lot is being politicized, and basically I think this podcast is going to be more critical than ever. So please stay with us and check in every week. Don't forget to subscribe, like, and until next time, this is the Energy Podcast, the Energy Signal Podcast, signing out.